Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Enphase Energy stock so we can determine if it's a buy or a sell. Enphase Energy is an energy technology company. It develops and manufactures solar microinverters, battery energy storage, and EV charging stations, mainly for residential customers. They are the first company to successfully commercialize the solar microinverter, which converts the direct current power generated by a solar panel into grid-compatible alternating currents. The company has shipped more than 48 million microinverters to 2.5 million solar systems in more than 140 countries. The company is headquartered in Fremont, California, and was founded in 2006. Let's get started with the model. This is a large cap company, 22 billion market cap. They're trading at $157 a share, and they have 137 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow increases each year from 124 million up to 700 million. Net income is the profit or loss on the income statement. It's revenue minus expenses. That increases from 160 million to 400 million. Revenue is the sales for the company, and that's grown a ton from 600 million to over 2.3 billion in 2022. Just last week, they released their first quarter earnings. For the first quarter of 2023, revenue of 726 million, 46% gross margins, and they shipped 4.8 million microinverters. Their revenue is flat quarter over quarter. Last quarter on Q4 2022, it was 725 million. But a year ago in Q1 2022, it was a lot lower, 441 million. So year over year, they grew a lot. Quarter over quarter, not so much. But their gross margins are higher, 45% in Q1, up from 43% and 40%. Growing margins is just as good as growing revenue, because if you manage expenses well while growing your revenue, then your bottom line looks really good. They do have higher operating income in Q1 compared to Q4, but lower net income. It's about 7 million lower in Q1 compared to Q4. Let's look at the capital structure. 800 million of equity, 1.3 billion of debt. They're 39% equity, 61% debt. And they could pay off all the debt with the cash on their balance sheet and still have over 300 million of cash left over. I used a WACC of 11.3%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 17 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $14 billion. We divide that by 137 million shares. And we get a calculated stock price of 103. They're trading at 157, so they're trading at a 53% premium. It's a sell according to the model. Simply Wall Street also thinks they're overvalued. Their target is 132. They say they're 17% overvalued. 25 analysts priced this stock, and the average price target is 264. The low is 169. The high is 341. Another 33 analysts priced this stock, and the average price target is 260. They say it's 68% undervalued. This is where the stock has been trading since they IPO'd. It took about 8 years for the stock to hit $50. That was in the beginning of 2020. Then about 8 months later, it doubled to 100. About a month or two later, it went to 150. Another month later, it went to 200. Then it dropped to 120, then shot up to 250 at the beginning of 2022. It hit close to 340 in the third quarter of 2022, but it's down about 50% from that peak. In the past 5 years, First Solar is up 160%. Solar Edge is up 420%. Enphase is the largest company in this industry. These two companies are number 2 and number 3. Look how much Enphase went up in the last 5 years, over 3,500%. That's just nuts. There are 20 companies in the same industry as Enphase, and if Enphase has a number in red, they're worse than the median. If they have a number in blue, they're better than the median. They don't spend too much on CapEx, only 57 million. Their debt to equity ratio is a little worse than the median. They are pretty leveraged. First Solar is really good at only 0.1. Nobody pays a dividend in this industry. They do generate positive free cash flow. Most companies generate negative. They're the largest company in this industry, a bit larger than First Solar, a good amount larger than SolarEdge. They don't really have good ratios. Their price to book is weak. Price to free cash flow is a lot worse than the median average, and a price to sales is much worse than the median average. Their PE is equal to the median, but worse than the average. But the reason their stock has gone up so much is because look at their 5-year annual revenue growth rate, 54%. Their revenue is growing annually at 54% for the past 5 years. And they have an amazing ROA and ROE. So to summarize, I have them trading at a 53% premium. I rank their free cash flows and revenue 8 out of 10. Their ratio is 3 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.